Hey everyone. Hey, sorry, just pulling up my little panel here so I can see. Hey Mark. Always the first. Mark's always the first. Hey Imad, nice to see you tune in here. Hey Bob, Diana, Fabio, Darren, Robin. Nice to see you guys. Tune in nice and early. Nice and early. Hey Pedro, nice to see you again. Right, kind of, but I'm sorry, just trying to expand this little thing, but okay, I just expanded. All right. Hey, Kanemba, nice to see you. Tune in. Moses, nice to see you too. Right. Cool. I can see we have our dear Annabelle here. Nice to see you here too. Hey. Right. Oh, Ima, waiting for the sessions from yeah. All right. Good stuff, man. Good stuff. Hey Moses. I'm doing good, man. I'm doing that life has been quite okay for me. I've been getting quite a bit of sleep, amazingly. So yeah, that works out pretty well, right? Mark, no worries, no worries. Fabio, I will send you the link to the VIP room in a bit. Yeah, I'll show you guys how to get access to the VIP room in a bit too, right? Update you on that. Hey, Joanna Fongqua, nice to see you. Desiree, nice to see you here, right? Yeah, nice to see you on time, on time. Okay, Yamilu, Calvin, nice to see you guys too, man. Yeah. Okay. Hey, Mike. Yeah. Hey, Mike. Nice to see you tune in. Right. Today's session is actually a very important session. It's one of the requests of the one of the most requested topics that you've been asking me to kind of focus on. All right, touch on, because we did it a long time ago, right? But it was very touch and go, right? And I think the recording had some bugs, so we didn't manage to do the full recording, right? So we're doing a trading psychology V2. I've added in some pretty new points here, which I think are very important in trading psychology, and also things that I have actually learned myself, right, over the years, right. I've added in my own fair share of stuff that I feel would be relevant, right, in yeah in this trading psychology, right. Yes. Oh, Fabio. Fabio is asking if I read the last Mark Douglas book launched in 2020. Did he? Did he launch a new book? Right. I know there's a Trading Psychology 2.0, which I have not read. Right. But Mark Douglas book 2020. Right. What is it? Is it yeah? Is it the Discipline Trader? No. Discipline Trader was 2020. Oh, the Tower of Trading. Is it the Tower of Trading? Right. How to build a bund. Oh, if he built not if he built is it the Tower of Trading? If Mark Douglas wrote a book that I have not read, I'm gonna like buy it right away, right? Is it the Complete Trader, right? The Definitive Guide to Mastering the Psychology of Market Behavior. I'm not sure is that the one. Yeah, I'll go check it out. Thanks for giving me a heads up. I didn't realize that Mark Douglas had another book. Right? I'll go check it out. Right. Yeah, I'll go check it out. Yeah. Sorry, just scrolling through Amazon now to see which was the book that was. Oh, the Complete Trader. Okay, I'll go check it out and then I'll let you guys know which is the book. Right. Yeah. I did Mark Douglas. No, I know Mark Douglas passed away. Right. I know he passed away, but I don't know when. I didn't realize he was it in 2015? Yeah. I'll go check up on that. Right. I'll go check up on that. But anyway, guys. Yes, as 2015. So yeah, maybe as one. I'm not sure. I'll be interested to know the 2020 book or something, right? The book that was launched in 2020. Anyway, guys, Trading Psychology V2 today. If you guys have questions on trading psychology, or those questions that you've always wanted to ask me, but it does not fall under like a trading strategy, like stuff that has to do with psychology, today will be the session that you can ask me, right? And I do want to encourage you guys to do it, because there's it's something which we don't focus enough on. But if you ask me, we humans are actually designed to be the worst traders, right? Where everything in us is designed to be bad at trading, right? And that's the thing, and that's the danger when it comes to trading is because we humans have a fear of loss. We have greed and all these things. When you see the stop loss moving towards, you see price moving towards your stop loss, you start to move it further. You see prices going towards your take profit, you start to panic, you close off part of the trade, even putting a partial profit, right, without a valid reason, right? And just so that you can feel safer when you close off part of your trade, that is a problem, right? It speaks something about the trading psychology more than a trading strategy, right? So in today's session, I'll be addressing some of it, some of the telltale signs that you might not have noticed it yourself, right? But are actually ways that you can improve on from a trading psychological point of view. Okay. All right. So because the ring soft call, I didn't know I was close now. And there's a Trading in the Zone is a great book, right? I always recommend it to everyone. Yep, Trading 2.0 by Brett, right? I haven't read it yet, but I think it was quite good. All right, last week Elliot was very good. All right, good stuff. I want to change my style of trading. Marzina says that I want to change my style of trading. I'm naturally drawn, which is to scalping, and she wants to train to swing trading. I'm unable to do it even on a demo. Any tips, please? All right, Marzina, I will touch on that in a bit. Very good question, right? I'm glad that you guys are sending the questions through. Before we begin, of course, we do need to remind you guys that disclaimer as usual, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? And for those, I just need to touch on a couple of key things for you guys over here, right? For those of you who are here for the first time, a quick introduction to your host for today, right? A quick introduction to your host for today. This is me, Desmond Leong, before I had a kid, right? So nice and fresh. Now I have a kid, so a little bit more IVEX, a little bit, put on a little bit weight here and there. But yeah, this is pre-kid Desmond, right? So yeah, I run the award-winning research from Everest Fortune Group and also the Forex Army. We are finalists of 2019, 2020, 2021, best FX and best equity research. Work with many major financial institutions on forecasting where the markets are heading. We have a special partnership with IC Markets where I bring you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. Many of you guys have shared how you've turned your trading, hit rate from 40 to 60%, 60 to 80%, unprofitable to profitable, right? It's music to my ears, right? And we will continue to teach you guys, how to reach, how to break through, right? Once the amazing thing, right, is one thing which, since we're on trading psychology, one of the things that I want to encourage you guys to do is that don't treat trading just purely, don't just keep your money in your account. You know what I mean? Don't just make money and keep it in your account. Instead, when you make money, right, redraw some of that profits and buy not only yourself, buy your loved ones, buy your family a meal, right? That to me is a monumental moment, right? Where you're actually sitting down, maybe you're sitting down at a nice restaurant, right? And you have you bought this meal and you can actually taste your profits, right? You can actually taste your profits. You can taste the money you've made, right? You can tell, you can tell your, whoever's, at the table with you that, this meal was bought from the profits I made. Don't just keep your profits in your account purely, just to accumulate. That is good, right? Compounding returns is good there. But instead, once in a while, take some of that money out, buy yourself a meal, go on a little holiday, maybe starting off with a meal first, right? Then sooner on a little bit more, treating yourself to different luxuries here and there, but of course treating your loved ones, right? And they can actually see, taste, and feel it, right? And that is a key moment, right? I feel in any trader, and that's something which I want to tell you guys to do, right? All right, guys, can you guys hear me? All right, because Mark just said that he can't hear me, so I'm a little bit concerned. Just checking my audio. You can hear me nice and clear? Okay, cool. All right, Mark, you might want to check your audio if everything's working fine, right? Yeah, of course, pay your bills first, right? Pay your bills first, right? with the money you make. Okay, good stuff. All right. I can see questions coming through. I'm gonna get to them in a bit. Okay, now guys, I do want to let you know some of the key topics we're going to touch on today. You notice it's a much revamped trading psychology 2.0. Uh, maybe that's right, Fabio. Right? Trader isolation. I'm going to talk about trader isolation, the dangers of trader isolation, sitting on your hands, right? What it means, right, and how it actually helps you make money, right? Dangers of perfectionism, right? We look at a little bit of strategy competence, right, which actually addresses the point with which Marzina asked about naturally drawn to scalping, right? Different strategies suit different kind of personalities. Then we talk about actually, there's a lot of talk about being a good disciplined trader, but there are actually limits to trader discipline. There are downsides of trader discipline, which I'll be sharing with you guys about. Then I'll be showing you turning adaptation into routine, right? And this is another interesting point, which I believe hopefully you can end off the webinar in time on this really, really important point. Okay. Before we begin, guys, a few key places. Yeah, agenda looks good. Thank you very much, Desiree. A few key places I want to direct you guys to, right? First is, of course, YouTube IC Markets. YouTube IC Markets live event is not here yet. Yep. The live same time, same place tomorrow. We have a live trading session, either done by me or Jin or Cassandra. Okay. Now, one thing I want to direct you guys to playlist, right? You want to go to IC Markets webinars. Sending you guys this link once again, right? I know you're sick of me sending it to you guys, but please check it out if you're a first-time trader here, right? Or first time joining us at IC Markets webinar, right? Come in here, go right to the bottom, start at the bottom, and work your way all the way to the top. Is 64 different videos, right? Trust me, you'll be sick of my voice at the end of it, right? If you live with someone, they'll also be equally sick of my voice, right? So just take note of that, but it will help you be a much better trader. Okay, really, really help you to be a much better trader. That's the first thing you want to go to. The second thing you want to go to is ic.genesis.com. Okay, I'm gonna send the link to you guys. This is our little VIP room that we have with all the different traders in IC Markets. As long as you have an IC Markets account, you can be in here. Of course, the more money you have, right, the bigger your account will be, right? And the great thing about here is that once you come in here, there's a whole nice bunch of people chatting, right? Thank you, Darren. I'm going lit. This is lit, right? Thanks for reminding everyone about my trading psychology webinar, right? But yeah, come in here, you can see people asking questions. Kurban, I will answer this question on the Nike tick reversal for you soon, but not really. I don't think it's a Nike tick because of it's a too small movement over here. But anyway, right, in this chat room, there are a few places you want to go to. Chat tracker, right, keeps track of all the different messages that are being posted in the room. So anytime you wonder what is happening, you just come in here and you just scroll up and down. You can see, right, Kurban Ali just created analysis on dollar yen. Darren O'Shea just posted there. And of course, right, one of the things that you want to do is when you're in here, you can ask me questions, and you can ask the rest of the analyst questions quite easily, right? Same thing as over here. You could be looking at this and you could be saying, right, draw Fibonacci retracement. Oh man, shit. This could, I mean, pardon my French, right? This could be a nice little breakout I'm looking at. Nice cup and handle kind of thing, right? You can say, hey, Desmond, right? Hey, Desmond, all right. Potential breakout from here. It has broken a key overlap resistance and also a 23% retracement. So what am I referring to? Overlap resistance, highlight this, click on this. I select this nice little overlap resistance and this 23% retracement. Click on this. I'm linking to this 23% retracement. I confirm I send it through, right? When you're reading the message for the first time, you're like, hey, Desmond, potential breakout here. This is the resistance. This is the 23% retracement, right? And if you want, you think it's lit, you can give it a nice little thumbs up, right? And you can go into a little dedicated discussion with me here. One interesting thing to take note, guys, right, is that when you are in this room, you might not notice it, but if you were on a different time frame, like if you were zooming in on the H1 time frame over here, right? When you click on this, it actually zooms in to my exact point of view, right? So click on this, you will notice it actually shows you the exact time frame, it changes to the H4 time frame, and it shows you the exact view that I was looking at when I drew this. So it actually records the x-axis and the y-axis. So it's pretty handy because you know this was what Desmond was looking at when I asked this question. Okay, so yeah, this is an important place that you know you can go into, right? We have some of you guys have asked. Now you should be able to view the nice little leaderboard, right? You can see who are the top performers over here, right? Nice little stuff over here. You can go check it out. Okay, now without further ado, let's begin today's session. I will answer some questions that I've seen first, because to me it's more important that I answer these questions than to as long as they're relevant, right? So the first one by Marzina, who's asking, right? I want to change my style of trading. I'm naturally drawn to scalping, right? And you want to change it to swing or day trading, right? I am unable to do this even on a demo. Any tips, please? All right. So when someone is naturally drawn to scalping, right? Usually, why people love scalping is because they love the intensity of scalping, right? So this is actually, I'm just gonna take up my pen over here. This is actually going to be addressed slightly later in strategy competence, but I can just cover it over here first, because this is not in any this is not exactly, this agenda is not covered in any fixed sequence, right? If I do see a question that is a little bit more addressable right now, I will actually answer it right away, because I think it's more important that way, right? So strategy competence, right? So you're talking about scalping. So the thing about scalping is, for those of you guys who do not know what it means, scalping is actually scalping is you get in and out of the market fast. Why people are attracted to scalping is because you get immediate validation of your result, right? You do not like to be holding on to a trade for long periods of time, right? It makes you feel uncomfortable, right? Usually when you're scalping, once you get in and once you get out, you know your result almost immediately, or within a couple of minutes, within a couple of hours, right? So that is one of the, I would say, I'm not going to say it's a benefit, right? I'm actually going to call it, that's one of the characteristics of a scalping strategy. Now, when you're scalping, there's, at the same time, there's a lot of excitement, right? So you need to know, for example, this is actually a strategy that resonates quite well with myself, right? I am a scalper, right? I am a scalper, but the problem, one of the problems I face is that I'm not really good at holding trades overnight. Okay, I'm not really good at holding trades overnight because I find myself waking up in the middle of the night, and this is legit, this is real, right? I actually, I have my phone placed beside me. I actually have dreams, right, of myself of hitting my take profit, right, or getting stopped out, and the dream is so real that sometimes I wake up with a little bit of smile to myself, like, yeah, I've made that money, and then I realized it was all a dream. Or sometimes I wake up and like, I just can't help it. I just, I reach over to my phone, right? I pick it up. I just squint at the MT4, right? Click on history tab, right? It takes a while to load, right? Okay, nothing yet. Click on the trades. All right, is my pending order hit? If it's not hit, right, then I'll just go into the chart. I squint at it a little bit. Did I miss the trade, right? And it's so disruptive, right? Now that I have a kid, I might be able to do that because he wakes me up in the middle of the night every time, right? But that in itself, those are telltale signs that overnight trading might not be the strategy for you. Okay, then again, right, it goes to how I managed to overcome this, right? I think it's important that I share it with you. How I managed to overcome this is that I hold overnight trades, but they are longer term trades, right? So my traditional style of scalping, right? So your traditional style of scalping, right? You get in the trade, you get in and out fast, right? You like to know the answer right away. You're very uncomfortable with not knowing whether you're gonna be right or wrong if it's held over a long period of time, right? What I realized is that when I'm trading overnight, right, this getting in and out, this freaks me out, right? This freaks me out very fast with a tight stop loss and take profit. So instead, what I do is I take a longer term trade. I go into the H4 time frame, right? I take a longer term trade, and I know that this trade will work itself out over 3 days, 4 days, and 5 days, right? And when I take the trade at night, I know that no matter how many times I wake up in the middle of the night, the trade is not going to move that much because it's such a long-term trade, right? Those style of trading, even though it's the same overnight trade, right? Just changing the approach, it helped me sleep better at night. I was able to sleep a whole night, right, without waking up at night. When I was trading on the H1, actually this was on like the M30. This was on the M30 or the H1, really in and out fast. You know my style of scalping. I've shown it to you guys before. It's in and out really fast. But when I go on this, when I try to do that overnight, man, it's terrible, right? So instead, holding on to like a longer time frame, and it helps me sleep better at night. Now, Marzina, of course, it begs to the question, like, when you say that when you're trying to go into swing trading, right, holding it for a longer period of time, one of the reasons why it might not work is because swing trading swing trading uses a different approach to trading, right? Meaning that I showed you previously I did this little graph, right? We had this little graph, technical analysis, fundamental analysis, right? And we have over here, we got scalping, day trading, and swing trading, right? So when you are a scalper, you got heavy reliance on technical analysis and not so much reliance on fundamental analysis, right? But if you are a swing trader, you actually have slightly less reliance on technical analysis and more reliance on fundamental analysis, slightly longer. I need to know, roughly what is the idea of, like, if you're trading oil, right? All those meetings on the G7 with Russia, what is the rough direction fundamentally for where oil is heading, right? And then of course, you see that would help me confirm the move on technical analysis. But in this case, right, you're using technical analysis, and maybe fundamental analysis is just a supporting argument, right? So in scalping, fundamental analysis is the supporting argument. It's not the main argument, right? But in swing trading, right, fundamental analysis is usually one of the main arguments, and the technical analysis is just to back it up, right? If you find a nice, like for example, if I find a nice breakout, things are lining up, it's better for me to get a bigger gauge of where the market is heading from a fundamental point of view. And if it completely clashes, right, then I know that it might not be a good idea, right? So that could be one of the reasons. I'm not sure if I fully answered it, but continue sending me messages and I'll try my best to answer them. Okay, Desiree is asking, I have difficulty holding a trade because it's just so hard to hold and see if it can really hit the take profit. How to train myself not to be affected? All right, okay. Okay, I got a few. Then okay. Who is that bot? I need to know who is that bot, right? I feel like I would know you, but I have no idea. Okay. 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 Wait. Okay. So yeah. So Desiree is sharing stuff here that she finds it a little bit difficult to when she's holding on to a trade and seeing it rise all the way to hitting his take profit. How to train herself not to be affected. She had experiences in the past, right? And now that so when a trade, right? So here's the thing: when you have a trade, right, and this is your take profit, right, and this is your stop loss. As price is going up towards its take profit, usually, right, you start to panic. You start to wonder whether price will reverse back down, right, and it stop you out, right, or whether might come all the way up here and then come down, right? Anytime it's in profit, you start to worry a bit. If you find yourself, right, wait, just let me pour a little bit of drink. Talking so much, my throat starts to hurt. If you find yourself wondering, right, give me a second. Okay, if you find yourself wondering whether like worrying, sorry, when you find yourself worrying that price is kind of working its way up to its take profit, but then you're not, it becomes very uncomfortable for you, right? It becomes very uncomfortable for you, right? One of the main reasons for that is actually because of your confidence in your trading strategy, right? Because if you were super confident that price will reach your take profit, you would have no question that there would be, that it would reverse. There are two problems, there are two main reasons for this, right? One is you're setting a take profit too far, right? Second is you're looking at the wrong stuff. You're looking at stuff that are unnecessarily affecting your trading strategy. Okay, what do I mean by that? So let me just try to pull up a chart over here for you, right? Let me just pull up a chart for you over here. Let me see if I can have it on over here. Hey, let's see. Okay, so let's just say, we are expecting when price breaks this level over here. Okay, when price breaks this level, we expected prices to, kind of drop lower. Let's just say price breaks this level. We expect prices to drop all the way. This is your take profit all the way down to here. You expect prices to go all the way down to here. Okay, the problem, right? The problem is that, as it's going down, 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 right? You start to panic, right? You start to panic that can it really drop all the way to my take profit? You start to panic, right? And you start to think, okay, maybe there might be a nice Fibonacci level, or then you start doing your Fibonacci, right? You do this, right? And like, okay, I'm starting to see something over here, right? You do a Fibonacci extension, bam, 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 right? And then okay, maybe Fibonacci extension is not that great. Nah, nothing much on Fibonacci extension. But you're doing stuff and you're like, oh man, I see a support level over here. Price, right? Price bounce up once, price bounce up twice, and it's bouncing over here. Then you start to panic that price might actually come all the way down to here, and it might bounce up from here, and you start to panic that it might go all the way down to here. It might not go all the way down to here, and might just bounce from here, right? So that happens a lot, right? That happens a lot, and even to me. And the problem with that is because your trading strategy, you have a take profit which is too far. Okay, your take profit that is too far. When you are trading, right? When you are trading, an important thing to do is to remain what I call your locus of control. Okay, you must have a strong locus of control. Now, the reason why you are worried, the reason why you're worried that price won't come down to here is because you are, as price goes lower and lower and lower and lower, right? You are losing your control. You're losing your locus of control. It's going further and further and further away, and it's getting harder and harder to, for you to control, right? It's the same thing like I told you about the weather forecast, right, guys? If you saw the weather forecast, right, and the weather forecast said that in the next 1 hour is going to rain, and another one said in the next 1 week is going to rain, which one are you going to be a little bit more confident about? Which one, which one would you which one would you believe? Which one do you have more confidence about? Yeah, Diana saying, yeah, I believe it now, 1 hour, right? Because that 1 hour, is within your locus of control, right? Is within your locus of control. But you say something 1 week from now, right? It's further away. You have a lower confidence. You have a lower locus of control, right? And because of that, you have less confidence in the weather forecast. Imagine you're planning a wedding. Let's say you're planning your wedding, and in the weather forecast says that in 1 month time, it's not going to rain, right? How much confidence are you going to have on that? You will naturally, while as it goes closer and closer to your wedding, you will naturally always have, even until 1 day before, you will still be panicking. It's like, oh, man, is it really going to rain, right? Because as things are not within your locus control, you notice that your heart, right, is not it doesn't sit well. You feel uncomfortable, right? And that is the thing. That's the same thing when it comes to trading. When something is too far away, when you have a less locus of control, you naturally feel less confident, right? And that reflects in the way you would trade. In closing out a trade, you're just looking at it as like, will price really go there? It's in a funny way, analogy is the same thing as saying, do you think prices would really go, you know, to my take profit. It's the same thing. You're just questioning the control you have over price, right? You're just questioning the control you have over price. So that's the thing, right? I hope this answers your question, Desiree, is that when you're trading, right? Sometimes when you're trading, you just need to play from one level of resistance to one level of support, one level of support to one level of resistance. Because anytime there is something in between, right? There is something in between, like you're playing to this level down here, but there is a level in between, you will start to panic, right? You will start to question when price is down here, whether you should be whether price would really go all the way down to your target, right? Yeah. Yeah, locus of control is important, right? Yeah, trading stop loss does help it some way, Kelvin. But trading stop loss is more of to comfort yourself, right? Unless you have a tactical trailing stop loss, like I call a dynamic trailing stop loss, meaning that in this case, let's just say, right, we have the key level over here, right? Your initial, let me just create analysis over here, right? Let's just say, your entry is over here. Let's just say your entry is over here, right? Your initial stop loss is over here and your take profit is down here, right? Let's just say if price breaks this, if price break this pivot, then we can actually move our stop loss, move it lower, right? And if price comes slightly lower, then you move your stop loss technically maybe to this level here. Then if price starts to go down, you can start to tighten your stop loss a little bit more. So this is what I call a tactical stop loss, trailing stop loss, where you don't trail it based on a parabolic SAR, right? Or you don't trail it based on like a fixed trailing stop loss. Tactical trailing stop losses are one of the best because you actually look at prices and you look at what the market is telling you before you take an action, right? So because that is what I feel is a more reactive style. It's slightly better. Market break a key level, great. Market break a trend line, great. Market break a Fibonacci level, great. You always just you hit the market once it gives you something, right? So tactical trading stop losses tend to be very good if you use it right. Just the fact that you're moving things to break even, it helps. Feel that you are not going to lose so much. That might help too, Desiree, right? When moving a trade to break even, right? Knowing that you have nothing to lose, it does help, although technically it's a bad habit, which I'll be touching on in a bit. Okay. Okay, let me just see some of the questions coming through, right? I'm a controller and can have a parent, can okay. So Marzina is saying that Toby, yes, this is live. Right? If you're wondering if this is a recording, no, this is live. This is live. I can see your questions, right? So you can ask your questions. Yeah. Oh, hi, Toby. Right. Right. Thought it was a recording, or maybe this is a recording from the future, right? And everything here, is scripted. We are in the matrix. You know. I can't believe you always thought this was a recording. Oh, come on, right? Unless we are maybe in the matrix, right? And I know everything they're gonna say next. Okay, guys. Now let's continue on. Okay, so we have some other questions come in, right? I'm just trying to answer them, right? Let's try to answer them, right? So we got dangers of perfectionism, right? So I'm going to erase some of my slides. Yeah, dangers of perfectionism. Okay, so some so okay, that bot, I will answer that in a bit, right? More focus on the stuff on trading psychology now. So let me know if you have any questions on that. Okay. No. Okay. We have a question here. I'm a control freak and have a perfectionist streak. Can I be successful as a trader? That's the dangers of perfectionism, right? So, guys, this is the thing where I need to share with you guys. It happens to cover one of my topics, which I want to share with you, and that is there is a problem with perfectionism, right? Because in the world of studying, right, in the world of academia, the more we study, the better we become the better we become, right? You study hard, you take an exam, you have a higher chance of being correct. The more you study, the higher chance you have of having an A, correct? So this is an important consideration to have, right? Because in trading, it is different. It does not mean that the more you study, you become a better trader. You can study the wrong stuff. You can study the right stuff, but apply it wrongly, you know? So it's like you can study something like Elliott wave, right? But you apply it to a scalping strategy, heck, it's not going to work, right? Elliott wave is more positional trading, right? So, you can learn the right things, apply it wrongly, lose money. Learn the wrong things, apply it rightly, you lose money. Learn the wrong things, apply it wrongly, you lose even more money, right? So in trading, it's a little bit scary. You can learn so much of the right stuff, learn the wrong stuff, and it does not guarantee that the more you learn, the better you become. In the world of academia, that was the case. The more you study, you can be smart. 20 years of studying, right? You might be a professor with a doctorate, right? 20 years of studying trading, you might be broke and living under a bridge, okay? Because that is the danger, right? If you learn the wrong stuff, you can go down the wrong path. Okay, Mike just said that he cannot hear any voice. Can you guys hear me? It's back. Okay, okay, cool. It's back. All right. Okay. Anytime it's gone, just let me know. Okay, anytime it's gone, just let me know. Okay. So yeah, when it comes to professionalism, right? One thing you need to know is that you need to embrace losses, right? And that is where we lead to turning adaptation into routine, right? Turning adaptation into routine, right? You need to embrace your losses. You must know that in trading, right? If you have perfectionism, right, it'll be very hard for you to rationalize your losses, right? And instead, you find yourself going for the high hit rate trades. Now, guys, remember, I have two scenarios here: trader A, trader B, right? Trader A has an 80% hit rate. Trader B has a 50% hit rate. Who is the more profitable trader, A or B? Okay, let's see some of your answers. I like some of the answers coming true, right? Some people say A, some people say can't tell, some people say depends on risk reward, some say don't know. Okay, guys. Now, trader A has each time he makes money, he makes $10. Each time he loses money, he loses $100. Trader B, each time he makes money, he makes $10. Each time he loses money, he loses $1. Okay. Now, who's the profitable trader? Suddenly, you guys are changing answer. It's B. It becomes very obvious that it's B. Right? Trader B. So you notice, right? When it comes to hit rate, it is not always the answer, right? So the problems with perfectionism is that you want a high hit rate. High hit rate is the death of many trading strategies because you feel that, right? You feel that it is with a high hit rate, you can be a profitable trader. But this is a perfect example where being a high hit rate does not make you a profitable trader. A low hit rate of 50% might make you a profitable trader, right? If anytime I say, guys, I got strategy A and I got strategy B, right? And I'm going to teach you strategy A or strategy B today. Which one would you want me to teach you? Right? I can see a lot of you guys saying B, and I hope you can. Imad saying it's both, right? You're always a crazy guy, Imad, right? Yeah, B if you can execute it. Yes, B if you can execute it. So the part on being able to execute and knowing that half of your trades are going to be losing trades, this is the part where it's the dangers of perfectionism, right? That you need to overcome, right? It's the danger of perfectionism. Freaking, I can't pronounce it. Perfectionism. Perfectionism. Okay, I got it. The dangers of perfectionism, right? That you need to overcome. Because once you can overcome it, then you can be a profitable trader. But if you're always so caught up with being loss aversion, you're afraid of losing, that is where you will not be a profitable trader. So if I told you that this is the only strategy in the world that stands between you and a lifetime of financial freedom, a lifetime of making millions of dollars, right? A lifetime of not having a care in the world when it comes to finances, right? If I told you that this is the only strategy which can work for you, how much more are you going to slowly train yourself? You need to have the motivation to look at it and train yourself to embrace that 50% loss. Okay, now important thing, turning adaptation to routine. So actually most of trading psychology is connected, so it's nice that I'm able to touch on one and jump to the next one, right? And that turning adaptation into routine is an important thing when it comes to trading. Now when you lose, you must don't take your losses as like punishment, right? You need to take your losses and you need to embrace your losses. This is the one thing which I want you guys to do. Embrace losses. A lot of people like to turn off their computer when they lose. They like to bury themselves somewhere when they lose, right? They like to take a trading journal, and sometimes when I say embrace, right? So when I say embrace, I don't mean analyze. Okay? Now, guys, big difference. Embrace and analyze, right? Embrace, not analyze. Who can guess why I am saying not analyze? Guys, this is a $1,000,000 question. Why don't you analyze your losses? I think some questions. Take a loss as experience, go through them and analysis, admit you're wrong, feel emotionally attached to it. You might discourage you, it'll affect your next trade, part of running a business, because the analysis are already made. If you analyze and you look for improvements and change system, make you doubt your next trade. It's just one of the percentages. Sometimes analysis losses make you repeat them even more. Same scenario won't happen again. Not true. Only puts you in a position to have more fear re-entering. Focus, analysis paralysis. Because market is somewhat random, there's no fixed correct answer. Affects psychology badly. All trades are different. Some of you guys got the answer correct. You did your analysis before you take the trade, right? You did your analysis before you take the trade. When you lose, you just lose. It's a game of probability, right? It's all law of probability. Like I said, you can check off one thing, you can check off two things, you can check off three things, you can check off four things, you can check off five things, right? Five things on why this is going to be a big good trade, right? When you take the trade, you have a 90% chance of being correct. And if you do lose, right, it's because that trade was in the 10%. You don't need to analyze all five again and wonder why you made the loss. It's just part of probability. You can lose. Instead, you embrace it, right? You embrace it that, yep, it's part of trading. I know I'm not going to be right all the time. I did my analysis before I trade. The important thing that you need to do is you need to ensure that this part, you did your analysis here. This is before you take a trade, before. This is after you take the trade. Do your analysis before, okay? Do your analysis before over here. This is where you need to do your analysis. After, you just embrace it. Don't analyze your losses after. Don't start looking at it and wonder, what could I have added in a 6 or a 7 or an 8, right? It's not going to make a difference, right? It's not going to make a difference, right? Yes, take a probability over a series of trades. That is exactly correct. No, it's just a probability over a series of trades. All right. Now, so that's an important thing, turning adaptation to routine is embrace, but don't analyze. So just embrace your losses, understand it's part of it, right? Take it in the chin, move on, right? You must know that it's part of trading, right? It is part of trading. I always have the 3 strikes you're out rule, right? Which I always recommend you guys to do. 3 trades in a row which are losing money, stop trading for the day and trade again tomorrow. Enough trading opportunities for everyone, okay? Enough trading opportunities for everyone, right? Is that different from backtesting? Kelvin, can you expand a little bit more? Yeah, can you expand a little bit more on your question? Yes, you need to focus on, yeah, Mike made a good point. You need to focus on your plan instead of focus on your P&L. I mean, it's important to look at your P&L after like 100 trades if you're losing money. Yeah, you know, look at your P&L. You know, it's not like you turn a blind eye to it, right? But so one big question that everyone has is, how do I know, right? How do I know my trading strategy is a profitable trading strategy? Okay, that's that's $1 million question. How do I know that my trading strategy is $1 million? You know, it's a winning strategy. How do I know that I'm not betting on a strategy that's strategy A, right? How do I know that I'm actually doing strategy B? This is where I want to encourage you guys that go through the stuff that I taught you on IC markets, right? Especially that webinar on swing trading, super duper important strategy webinar for you to go through, right? It teaches you all the things that you need to know to be a good trader. Now, remember when it comes to trading, right? It is not about 5 check boxes, RSI, stochastic, MACD, oscillator A, oscillator B. It's not about looking at the same stuff. You need to combine different studies from different places, right? Like I'm not sure if I shared with you guys the example before, right? If you go into a Mercedes showroom and you ask which is the best car, what are they going to say? They're going to say it's a Mercedes. And you ask going to a BMW showroom and you ask what is the best car, and they're going to tell you BMW, right? So you're asking for you're asking for opinions. Don't seek opinions in a very from the wrong places, right? Instead, if you ask like maybe, or you go to the different showrooms, you got Mercedes, Audi, BMW, right? For traders, Lamborghini, go Lamborghini. Ask what is the best electric car, and all of them say, yeah, you know, actually Tesla is the best electric car, right? Suddenly, you know, different people agreeing on something different, agreeing on the same thing. That is an important thing, right? So you need to use, like, for example, when you're creating your checkbox, you know, you need to have something like, you need chart patterns, maybe. You got chart patterns, you got support and resistance lines, right? You got Fibonacci, right? You got momentum, right? You got oscillators, right? You got correlation, you got all the different stuff here, right? And if all of it is saying up, 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 this is the equivalent of BMW, Audi, Mercedes, Mini Cooper, Volkswagen, and Ferrari all saying that Tesla is the best car, right? That's the equivalent of it. And that is what you want to do, right? In your trading, you want to find different camps of strategies, and you need to apply it in your trading. So you notice in my trading, like in what I'm teaching you, we teach you a wide range of things, right? The correct way to apply it. And when you combine it together, that's what I call confluence of reasons, right? Once you have a confluence of reasons, that gives you the highest probability of being correct. Okay? So yeah, and so yes, that will give you the confidence your trading strategy is a good trading strategy. Okay, guys? Now, next thing, right? So anyway, about trader isolation, right, is something which I wanted to focus on here. If you guys do not have access to the room yet, please head over to this room that I sent you guys. Trader isolation is very important because of this thing called accountability. Accountability and a support network. Accountability. And of course, a support network, right? If you have a bad day, no harm in going to the room and telling people that, you know, I had a bad day, right? I've seen people support each other, let them know that, you know, it's part of trading. Don't worry, we take losses. You know, there is this a little bit cheesy saying that, you know, if you don't go fast, go alone. If you don't go far, go together, right? You need people to trade together with you. You know, you need people sometimes give you a second opinion. You put a trading analysis there, you draw a trend line, you draw everything, and I look at it, I'm like, you forgot that maybe there's a major trend line that's going down, right? So it gives you accountability, support framework. It helps other people assess your style, whether your strategy is like overly biased on like maybe a certain approach, right? So trader isolation is something which can be solved. Just join the VIP room, right? I'll approve you guys. As long as you have IC Markets account, I'll approve you guys. And that is where, you know, I want to encourage you guys to just keep a watch out for each other, okay? Now, the other thing that I want to focus on is sitting on your hands, right? Sitting on your hands, right? In trading, one thing I want to let you guys know is that a lot of money is made not trading, right? So there are two things that you want to do, right? you want to have profit. You want the profit maximization, and you want loss avoidance, and loss minimization. Loss minimization is like idea invalidation, like I told you guys before. You try to get out of a trade when it's doing badly. Loss avoidance is avoiding getting into low probability setups, right? So what I encourage you guys to do, how many of you guys here have a daily trading target? Like, or maybe if you have a daily trading target, can you tell me how much are you looking to make in a day? How many pips? How many percent are you looking to make in a day when it comes to trading? Okay, right. We got Marzina 0.5 to 1%. Diana saying 4%. Mike says he doesn't have one. Adam only about 40%. Right? Shit, that's a lot in a day. Kelvin 1%. Bob, Bob wants to make 50 pips a day. Right? I like Darren's answer. Right? Spoken like a pro. Right? Joanna Francois. Right? But whatever the market gives, not lose more than 3%. All right. I like Joanna Francois' answer. No target, each day, right? No, okay, cool. I like some of the answers that came true. Now, guys, okay, Adam Phillips says 3 to 5% a month. Now, let me have another question for you guys, right? Let's just say it's a Saturday. How much money do you intend to make on a Saturday? Or how much money do you intend to make on a Sunday? You know, not trading crypto, just trading Forex. Why zero? Why none? Yeah, it's close. Joanna asks, is a question mark is close? Yeah, so it's close, right? Mike, it's not that there's a day off, it's close. What does being close means? Close means there is no liquidity, there's no movement. In a normal trading day, there could be a lot of movement, correct? So if you know that you're not going to trade when the markets are not moving, what if the markets are barely moving, right? What if you have a day where the market is just kind of just moving like that, you know, maybe December when the markets are moving a little bit? Do you still try to go for your 1% a day? Do you try to still make your 50 pips a day? Do you still try to make money? No, right? And that's the danger. Don't have a trading target. The moment you have a trading target, you will start to compromise on your trading rules when it comes to towards the end of the day. It is 11 p.m., right? You know, your wife is saying, hey, it's time to get some sleep, yo, right? And you're looking at the charts and you're like, man, I am at 0.8%. I just need another one more trade. I need one more trade and I can hit that 1%, right? And like, I need to squeeze out this trade. If not, I cannot hit my target. What do you start doing? You were trading on the H4 chart. You start thinking, maybe I'll go into a smaller time frame, right? You go into a H1 chart. I start looking at trades, nothing much there. I used to, my strategy works very well with majors, but maybe you work on the crosses, right? Then you start looking at the crosses. You start looking at commodities, you start looking at lower time frame, you start trading additional indicators, you start looking for opportunities where it do not exist, right? You compromise on your original strategy, or H4 maybe. Just look for that additional bit to make that little bit more money to hit your target. What for, right? If the market is not giving anything to you, stop trading. Don't try to squeeze it out of the market, right? So guys, when it comes to trading, don't have a target. It goes against a lot of the rules, a lot of the gurus out there. But I'm telling you from a professional perspective, don't have a daily target. Trade what the market gives you, right? I know a lot of people say treat your trading like a business, right? Business, we have targets, we have revenue targets, and they say that in trading you have a target 100 pips a day, 200 pips a day. Anytime I see a trading guru or a trading Telegram group will say they target 100 pips a day, I'll call it absolute BS, right? And say they don't know what the true meaning of trading is, right? I'm telling you from a true trader's perspective that you cannot have a daily target. You can only trade what the market gives you. Okay? Can only trade what the market gives you. Now, okay, so sitting on your hands is equally important. When there is sitting on your hand helps you avoid losses, and in turn helps you improve your profit maximization, right? It helps you improve your profit maximization. Um, Marzina is asking what I think you asked earlier. What's the best trading strategy, scalping strategy? Similar to what Ima asked. Ima asked, you know, if you just use the Nike tick trading strategy, yes, it can work out. Yes, it can work out. But you must find the markets that work better on, right? Some markets work better than the others. I'm actually running a back test, right, on all the different I don't have it here, but yeah, I'm actually running a back test on the trading strategies on the Nike tick, right? It's just a little bit hard to program the Nike tick, but it has been profitable, thankfully, right? And yes, so technically, if you just stuck to one strategy, yes, you'll perform well. Okay. Okay, just see some of the answers coming through. Now, I do want to talk about strategy competence a little bit on that earlier, right? Find a strategy that suits you well. At the same time, right? Do not the important thing is that yes, find a trading strategy that suits you. If you only have 30 minutes in a day, don't try to scalp, right? Don't try to scalp. You're going to try to squeeze too much decision making into that 30 minutes, right? So if you only have 30 minutes a day, maybe a 4 hour, you know, a daily a day trading strategy where you look at it 15 minutes in the morning, 15 minutes at night, half an hour in the morning, half an hour at night. If you don't have that much time to trade, pick a trading strategy that suits you better. One thing you've learned from me is that there are profitable scalping strategies. I've shown you how to make money scalping. I've shown you how to make money day trading. I've shown you how to make money swing trading, right? There are different approaches to it, but each one I gave you, you know, there is a strategy for each approach. Don't, you know, find one that suits your timing, your style of trading, right? Don't try to force yourself into a trading strategy, a trading approach that does not sit well with you, okay? Um, Isaac, you need to register for an account, right? Yeah, so just register for a free account. Then take a screenshot of IC Markets live account. As long as you have money in it, $1,000, you know, you get access to this, right? Kerban's asking best time frame for Nike Tick. H1 is pretty good. H1 is pretty good, right? I will go lowest to M30, but H1 is pretty good, right? So Diana is asking, what is your opinion if you trade with paper money, you don't have the emotion as real money, right? Don't trade with paper money, right? Make your mistakes on a paper account, meaning that make your platform mistakes on a paper account. That means if you take a trade, you accidentally click the wrong button, use the wrong stop order, use the wrong limit order, do not know how to use trading stop loss, make your platform mistakes on a demo account. But that is the furthest you will go. When it comes to real trading, $100 live account is more effective than a $100,000 demo account. The reason for that is that $100 live account gives you the emotional, you know, losing $5 feels so much more real than losing $50,000. Losing $5, you're like, oh man, that is my chicken rice, that is my my lunch, my coffee, right? But you know, trading, you know, losing $50,000 on demo account, you're like, yeah, it's nothing much. I just reset it. So trade on a small live account, you train your trading psychology much more than a demo account. Okay. So Ima says, notice it works better on Asian session. Interesting observation, right? I would like to know more about that, right? Marzina, I have made a video of my scalping strategy before, right? You tune into a live trading sessions, you should still have seen it a bit, right? But we do have a scalping webinar, right? That I touched on recently, right? It uses a lot of Fibonacci. Zaba is asking, can you do a webinar where each of the trading styles are shown in some examples? Yes, Zaba, I'll try to add that in. I haven't done a proper back testing. People need to treat that. Yes, people do need to treat $100 seriously, right? You need to treat it seriously. Don't take it as money that you can just wash away. But you know, yes, use an account size that you feel a little bit of a pinch. If you're a millionaire, $100 might not feel like a pinch for you, right? Lost so much chicken rice already. Joanna, hey, it's interesting. How do you know about chicken rice? Right. Okay, I thought it was a Singapore dish or something. Right. Don't worry. That's where the VIP room, that's where the IC Markets YouTube, right? That's where it will help out. You know, that's where you hanging out in there will help out a lot too. guys. Now, if you can help me, right? If you can help me, there's one little favor, right? Imad, I have actually built a Fibonacci Confluence tool which you can check out. I hope to send you guys soon, right? If you can help me, guys, right? I'm not sure if you guys are up for it, but if you can come in here, right? When you're watching the webinars, help me do two things. Help me like the videos, right? So that it pushes it up the YouTube algorithm. And another thing, help me ask questions, right? Because we are trying to create little timestamps in the video, right? So that you can address more questions. Some of the feedback that has come through is that sometimes in a video in the middle, right? If there's something that you're not sure about, if you can ask it, like what is scalping, right? And you ask maybe um, you ask something over here, right? I'll be able to reply it, right? Oh shit, there's a reply over here. Um, okay, yeah. So okay, thank you, Bonnie, for asking the question. But yeah, help me do two things. You can help me just like the videos to improve the YouTube algorithm and ask questions, right? I'll do my best to answer you there, right? Because we're trying to make it into a such. Even if you have any question on scalping, right, guys, this is my promise to you. If you have any question on scalping, if you have any question on day trading or swing trading or divergence, you don't even need to timestamp it, right? Just go into the YouTube video, ask it, and I will answer it. Okay, just ask it and I'll promise you that I will answer it. Okay, so any question, right? If you find me that I'm not answering the VIP room, come in here, ask the questions on trend lines, whatever it is, and I will answer it over here for you guys. Okay, right? Karban, yeah, you can request. That is right. You can request if you're a gold tier in the IC VIP room. You can request for certain instruments under trade requests. Okay, yeah, this is the part where you can come in here. You got all the fellow gold tiers. You can come in here and ask me a trade request question. Okay. Now, guys, thank you so much for staying throughout this entire webinar. Right, it's really, really, it's really great for you to stay all the way throughout. All right, I'm going to run a quick poll. If you can just help me, right, help me do a quick rating on how you find it 1 to 5, with 5 being the best. Let me know how you found it, right? We're always trying to improve the webinar, right? I'm still longing for the day where I hit 100% 5-star rating, right? But so far, haven't been there yet. But yeah, I haven't been there yet, but hopefully one day will come, right? But thank you so much for staying throughout this entire webinar, right? I hope you found it useful, especially when we do a deep dive into trading psychology on how to be a better trader. If you have suggestions on how I can improve, let me know too, right? Yeah, let me know too, right? I will check it out on DXY, right? That bot, or maybe I can read up about it too. I believe it actually didn't really explode on many of the time frames. Nothing much here, nothing super major, right? Thank you very much, guys. Right, gonna close off the polls. Right, gonna close off the polls. Right, thank you. We got a good 95% of you guys voted 4 and 5. Right, thank you very much about that. Right, the 3%, the 5% voted 3 stars. Let me know how I can improve. I'll do my best. Right, thank you very much, Moses. Yep, I'll do my best. I have a good night tonight. Right, thank you very much, guys. I'll approve you to the VIP room, right? No worries, Arkibong. I'll do that favor for you, right? Anyway, guys, that's it for me. Chicken and rice in general. Yeah, that's a Singapore chicken rice recipe. That's right, man. Guys, that's it for me. Catch you guys in the VIP room. I'll catch you guys tomorrow. All right, you should be able to see me tomorrow. Otherwise, you either be Cassandra or Jin, right? Now, guys, stay safe, trade safe, peace out, take care. I'll catch you guys soon. Okay, catch you guys soon. Bye bye.